40 seconds.
Before I joined Cashflow Tribe, I would go to these meetups and nothing really changed. There was no accountability, which is one thing that's really core to Cashflow Tribe. Not only did you have this intense sense of community, but you also had accountability.
I was working for somebody else that was not me. Okay, this 9-to-5 rat race that I'm trapped in, I don't like it. I know something is bigger there for me.
Cashflow Tribe has been some serious practitioner information that I was able to tap into. I knew I needed to take it to a higher level.
Cashflow Tribe was Canadian, and that's what really kind of moved me more towards them. This is exactly the kind of group and people that I want to be part of.
If somebody's losing in one of my deals, I don't want to do the deal. If I cannot have my partners to win on the deal as well, I don't want the deal.
My name is Douglas.
My name is Tish.
My name is Alex, and I am.
And I am.
And I'm Cashflow Tribe.
Cashflow Tribe.
Cashflow Tribe. Huh.
Good evening, Cashflow Tribe. Let me know that you can hear me. Let me know that you can see me, because I'm ready to bring the fire tonight. I hope you're doing well. For those who don't know me, my name is Daniel Blagrove. And so I'm really, the purpose of why you're here is that you want to understand how to raise capital. That's the real deal. How to raise capital, how to be able to raise money for your deals. You want to get into real estate. Maybe you don't have them in savings. Maybe you don't have a house where you can tap the equity. Maybe you don't have RSPs where you can be able to use to fund your deals, but there are other resources. It's other people's money. And so this is the purpose of why you're here tonight. And I got to tell you, usually I'm coming with the cash flow black, but I'm here with the army green, because the guest I'm bringing on means real business. He ain't coming in here to just mess around. He's coming here to really help y'all understand how to do this business with using other people's money. So let me know where you're tuning in from. Let me know where you're from. I want to be able to engage with each and every one of you. So let me know in the chat. Let me know in the comments where you're tuning in from. I'm going to just shout out a few people out, man. Steve, what's going on? Tony Bush from near London, Ontario. That's awesome. Adrian, what's happening, my man? We got Claudia in the building. We can hear you. We can see you. Thank you very much. We also got the lovely Sarah Fram. Let me tell you guys something, man. If you have any questions, any questions whatsoever about the content, about the topic, about the things that we'll discuss later on, she is absolutely the point person to go to. So she'll be happy to address any questions, any comments. She's the one that'll set you up. Maybe you got an email from her in the past. Don't worry, it ain't spam. That is my homegirl. She's going to help you get set up with whatever you're looking to do in real estate. So happy to have her on as well. Dwayne, what's going on, man? Melissa, this good to see you. Alexander, Arthur, Jeffrey, Jan Carpenter, Arlie Green from Kitchener, Ontario. Is good to see you in the chat. We got Bainbridge. Man, that name is so good. I love it. Ian Jack, Tom Falkins, what's happening, man? Troy. All right. We got people from BC, Halton Hills, Burlington, Winnipeg, Stratford, Montreal, Mississauga. That's awesome. What's up, Tara? Love it. Okay, guys. So like I said, OPM, using other people's money. That's the topic of today. I'm not going to waste no more time. We got to get to business. Ain't that right, Stephen from Calgary? All right. So let me before I actually pull up just the slides and all the information I'm about to really give y'all. Let me just put out a poll real quick. Just want to kind of get where y'all are at right now. Because I really want to make sure that today's talk that I'm going to be doing with Mark Smith, it makes the most sense for y'all. Are you brand new? Are you an action taker? Or are you experienced doing 5 or more deals? Let me know. And don't lie to me. Don't tell me you got more than 5 deals and you only got 3. And don't be telling me you're still learning when you're ready to take action. Let me know where you're tuning. Let me know what you're looking to do. Brand new, action taker, or if you're experienced. And while you're doing that, I'm gonna get the stuff ready to go. Blaine Kerr from Toronto. We got Regina, Saskatchewan in the virtual building. That's awesome. I love it. So while you're filling that out, let me just pull up the slides real quick. Oh, boom. Shout out. Yo, Vinny, unmute yourself real quick. Say hi to the people.
Hello, everyone.
Yes, sir. He is the MVP behind the scenes, the one who gets it done. So all the magic you see, make it work, man. It ain't me. It's the man, Vin. And so he's definitely the one to hold it down. So that's awesome. All right, guys. I already introduced myself. I don't need to tell you about myself again. But for those who don't know, I'm the 7th member of Cashflow Tribe. We now have over 3,000 members in Cashflow Tribe, and I'm number 7. So I'm definitely the early bird who got that worm. I'm also the host of The Pitch. It's a show that's similar to Dragon's Den, where we have real estate investors pitch deals to people who have money to lend, money to spend, and money to make until the very end. And so I love hosting that show. It's a great show. We completed season 1. Season 2 is coming down the pipeline. And so keep an eye out for that. I'm also a member of the Council Mastermind, Canada's #1 real estate mastermind. And I've also been doing deals since 2019. But forget about me. This is all about the 7-2 mindset investor, AKA Mark Smith. He's the co-founder of Clydesdale Capital Group. With over 23 years in high ticket sales, guys. I said 23 years in high ticket sales. You want to talk experience? My guys brought it today. With over 83 million in sales, he specializes in large multifamily apartment buildings and is projected to move over $20 million in apartments nationally across Canada in this year of 2021. Ladies and gentlemen, put your virtual hands together for the one and only Mark Smith.
Yo, what's going on, everyone?
Yes, sir, Mark, brother. Look, man, I gotta give a disclaimer, y'all. Look, man, look, I gotta give props to Mark because, listen, man, we all got things going on, and right now he's dealing with the allergies. Right now, he's battling, but he's still showing up. Understand that he could have just said, man, let's do it in the summertime when I ain't got to do it. Or let me do this in the wintertime when I ain't got it. No, he says we are going to do it no matter how I'm feeling, no matter what I'm dealing with. I'm going to show up. And so props to you, Mark. How you doing, man? Talk to the people.
Yeah, I'm hurting, man. I'll tell you that much. I think I've gone through about 3 boxes of Kleenex today. But I'm here, man. Life has to go on, right? So
you're absolutely right. You're absolutely right. And so I hope people take note, man. This is no different with real estate investing. No matter what roadblocks come your way, you just got to keep moving forward, got to keep pushing, got to keep getting stronger. So let me tell you all about today's goal. Like I always say, one step closer. We've been talking about how to do deals off market. We've been talking about how to get your personal finance in line. We've been talking about all sorts of different topics. I even brought on several different people to show you how you can do deals without having to spend a ton of money. We're using free marketing, using your time and energy. Now we're going to be talking about how to use other people's money. All right. So we're going to get you set up real quick. That's today's goal. So with respect, let's turn off all the distractions, put it on do not disturb. Let's put the kiddies on something that they can enjoy. Or maybe it's this conversation. Who knows, man? Whatever your desire is, let's put distractions away so that we can get this game that Mark, the 7-2 mindset investor Smith, is going to give us tonight. Okay. So I'm going to do a real quick recap. Some of y'all might already know, but as I already told you, the process of purchasing your first or next deal is in a series of steps. When we look to do this whole goal of buying a property, we look at this mountain and we think this mountain is so high. It is so big. How am I going to overcome this huge mountain? The answer is very simple. You do it one step at a time. So whatever stage you are at right now, all I need you to do is to focus on the step you're currently at. And some of y'all are at the step where you're ready to do deals, you just don't have money. And so the next step is understanding how you can start to raise capital for your own deals, right? And so this is the topic at hand, all right? And so I'm going to take a look at the polls. We got over 60% of y'all saying that you're an action taker, ready to do your first or your second or your third or fourth deal. All right. And so here's my challenge to 60% of y'all who have voted and who have answered that poll. I want you to really sink your feet into what Mark Smith's about to give us today, because I really think it's going to help you really accomplish that. All right. So the first thing I want to talk about, the problem between our ears. Mark, I know you love to talk about this, so I had to make sure this was a topic. See, the reality is before we can figure about this, we got to start thinking about this. Mark, talk about this for a second. What is the problem that is between our ears?
Ourselves, our mindset. I mean, it's amazing. And I think what it comes down to is everybody is so fearful about money. And this is simply our relationship with money is what it comes down to. So we have financial literacy, so IQ, and then we have emotional intelligence. And I believe, sadly, most just live in that. And I did it myself. So it's really at the end of the day, and I say this to everybody, is just take your hands. And if you haven't done this exercise before, just take your hands, put them beside your ears like this, and move them forward. Look at that space. Look at that gap. That's the distance between you and you achieving your goals. So if that's that Lamborghini, if that's you retiring your parents, whatever it is, that is the space. That's it. So you need to go from point A to point B. That's it.
Man, that's phenomenal. And the reality is sometimes we like to make it a lot bigger than it seems. But once we fix this, we actually by as a result, we fix a lot of the other things that we thought were the real problem. And I love that you talk about how we may not want to buy a house because there's a foundation crack in the property. But the reality is there's actually a more important foundation crack, and it's not in a property, it's actually in our minds. And so I know when it comes to the fixing this foundation, it can usually fall under 3 categories or more, but I'm just going to talk about 3 today. We're going to talk about the abundance of money. So the reality is, because we don't have the money to buy a property today, we think there's no other way we can find money to buy it. But that's simply not true. How should we think about money in terms of abundance or scarcity in this conversation, Mark?
Yeah, it's a story you tell yourself. The fact is, folks, you need money. That's what you need. And if you want to scale your business, you have to change your relationship with money. And instead of looking at it as if there's no money out there, no one wants to lend you money, you are the common denominator, and you got to figure out what that is. So we're going to talk a little bit further about that. And I love that, the abundance of money, because you know what, folks? Money's everywhere. And I'll give you some examples of that, just what I've been able to do in the last couple of days, which is raising money. Money is everywhere. So what you don't have is you don't have time. If you're concerned about deals, folks, there's deals everywhere. Some of you are going to say, what's he talking about? There's no deals out there. No, folks, there's deals everywhere. Question is what are you doing first? Are you looking for the deal first, then looking for the money? Are you looking for the people first before the money? And that's what, I'm going to jump ahead here. Dig the well before you're thirsty. You need to have the well dug so you can pull the trigger. So in your eyes, if you're saying there's no deals, the deals are there, folks. They're just going faster than you can blink.
Wow, I love the way you opened up that segment. You said that we need to really challenge our paradigm. Where did we get this thinking that money is scarce, that there's no money anywhere, that maybe it's there for Mark Smith, but not for me? Who told you that? Where did you learn this from? Right? And these are the things that we need to start challenging. We need to start redirecting so that we can start to make progress in our journey. In your opinion, Mark, what is the number one reason people don't invest in you or with you?
Oh, great question. I'm not going to invest money I don't have confidence. If someone doesn't have confidence, I'm not going to give them a dime. That's what it comes down to. So really, at the end of the day, it doesn't matter what book you read, whether you're reading The Go-Giver by Bob Burke. He was on my YouTube channel, I had him on my podcast. You got to deal with people you know, like, and trust. The late Stefan Arnio, same thing. You got to work with people you know, like, and trust. So these are the things that we have to focus on. And for me, one of my prerequisites when I'm lending money is, are you investing in yourself? Because if you're not, then why the hell should I invest in you? You're obviously cheaping out on yourself in any way or form. So why should I invest with you? And that's what it comes down to. And folks, there's a great book. I highly recommend it. Again, it's called, I think it's called Future Proofing You by Jay Samit. We're going to have him on the podcast soon. And the same thing. I mean, he talks about that. If you invest in yourself to take down your competitors, no one's going to invest in you. But you start investing in you to improve yourself every day, people will invest with you. That's it.
Wow. You have to have the confidence, and you also have to be willing to invest in yourself. Consider this. Imagine I came to you and I told you, yo, check this out, man. There's this new thing where people are making 20, 30, 40% returns on their money, and all they got to do is X. And then the next question comes is, oh, cool. Have you done that? Oh, no, I haven't done it, but I think it's really cool. You should check it out. Well, why am I going to check it out if you're not doing anything about it? Consider this. We all know for 100% of a fact that real estate is not a scam. The reality is, when you invest in real estate wisely and you make calculated decisions and you make the commitment, you will definitely get results over a period of time if you don't quit. But the reality is, when you come across the table from someone as timid and not sure or not really confident, the problem is not the real estate. The problem is the investor. That we need to understand that the vehicle is not the issue. It is the driver of that vehicle. If they don't have confidence in the driver, they won't have confidence that you can bring their investment to the destination. And that is the quintessential thing as to why people don't invest in you or with you. And now the third point I really want to make mention here is you talk about digging your well before you're thirsty. There are some people who say, well, you know what? Why do I have to dig my well before I'm thirsty? The reality is, if I have a real deal, then I'll just get money whenever I want. What do you say to the investor who says that?
What? Sorry, I already bought another deal. What? And so that's the thing. Like, and the best analogy there, folks, is this is a game of speed. And, you're just, no offense, but you're just one of the people that are interested in a good property or the potential of a good property. So having said that, instead of thinking, I have to go. So let's just hypothetically speaking, Danny, or you come to me and you say, hey, Mark, I got this deal. I'm going to get it on 70 cents on the dollar. And this is the potential. I'm like, okay, I'm good at that information. I already have the money to deploy. Well, how do I have that money? Well, I've already dug that well first. Well, Mark, you're paying interest on that money. Yes, but guess what? I got the deal. You didn't, because now you have to go through all that process. So folks, it's the 6P principle. Proper planning prevents piss poor performance. Remember that. Proper planning prevents piss poor performance. And if you remember that, just dig the well. So if someone's gonna lend you $100,000, for example, and let's just say it's 12% a year, well, that's $1,000 a month to get the $100,000 that you could probably use right away to deploy on a deal. So essentially, what's the cost on that for you? It's $1,000 a month. So you got to change the way you look at it. You don't go grocery shop, or you shouldn't go grocery shopping when you're hungry. You go in proper plan, especially when you have children.
100%,
right? So.
If that ain't the truth, man, holy smokes, that right there is enough for this webinar. Do not go grocery shopping when you're hungry, man. I'm telling you from personal experience, don't do that. But no, man, I love it. I think this is absolute great content that Mark is sharing. Here are some commonly asked questions, and I'm going to have Mark do some real quick 10-second responses to these questions. So let's go through them real quick. Mark, number one, how do I raise money without any real estate experience?
I think this answer is going to be very predictive. Get in the right room, invest in yourself, and then you have people, the who's are going to show you how it's done. They're going to teach you how to fish. That's how you raise money. Don't go into YouTube and just try to memorize a script. Get in the right room.
100%. But Mark, shouldn't I maximize my own personal buying power and utilize that before getting partners?
You can, but then there's a term for this. It was a DARE. Have you heard what DARE is?
No, tell the people, man.
A DARE is a term. It's called a dumbass real estate investor. Okay, because what you're doing is, because I was a DARE, and I went and I tried to maximize my buying power, which I did. But all I did was I hit that wall fast and furious, and I made so many mistakes along that way when I could have just did it a whole different way. You don't know what you don't know, folks. That's what I'm telling you right now. So should you maximize your buying power? If you can, great. If you have a job, yeah, take advantage of your employment income, but don't let that be your sole source.
Yeah, I get that, Mark. But here's my problem. How do I approach potential partners without looking desperate for money?
Yeah, that's again, when I'm raising money, I could tell you I don't look desperate because I've invested in myself. And most important thing, folks, it's not the real estate property. It's not the property itself. That's the asset. You're the asset. I don't need to come desperate because I know I'm the asset, and I'm as a fiduciary of someone's money. I know their money's in a great spot, and I'm going to make them money. So I'm never desperate for that. And if you are desperate for money, then we have to re-examine why you're desperate for money. There's a kink in the chain that you need to fix.
100%. You're absolutely right about that. It comes down to confidence, as Mark already mentioned before, understanding the value that you bring to the table so that you don't need to be desperate for money. Because here's the truth, guys. Here is the truth. You want to talk scarce? You want to talk scarcity? Here's what's scarce. People who have the skill of raising money. That is not abundant. What is abundant is money. See, here's the difference, guys. If somebody comes to you and says, well, I should call all the shots because I'm the one that has the money. Here's what I say to the person. With respect, I absolutely love that you've spent a lot of time and a lot of energy to make the money that you've gotten. And I absolutely want to make sure that every penny that, should you choose to invest with me, is extremely valuable. But here is the truth. You're not the only one with money. There is so many other people who have money in RSPs, in equity, in savings, in other deals that they're ready to cash out on, whatever the case may be. But what's not everywhere is the ability and the skill set of being able to invest your money and bring you better returns in the stock market or your RSPs or whatever other things that you've tried over the last 6 years. So just wanted to leave that there. But here's the fourth question, Mark. All right, I get what you said about questions 1 through 3, but here's the deal, Mark. Does every JV partnership have to be 50-50?
No, and whoever thinks that, I mean, that's just because someone's, I don't want to say, yeah, I guess they're uneducated, because I have JV partnerships that are 33%. I have some that are, have one that's 40%. I have one that's 75%. So at the end of the day, it's what you negotiate and most importantly, what you bring to the table.
Man, I love it. I love it. Now, let's really talk about this aspect of debt versus equity. First, we need to really break down what is it when you mean to raise debt and what is it when you mean to raise equity? And then here's the next question. For the investor, let's say they're starting out, right? They're looking to do their first or maybe their next deal. How should they go about this? Should they focus on raising debt or should they focus on raising equity?
It really depends. It really depends. So folks, if you don't know what the difference are between raising debt or raising equity, raising debt is like a private loan. So I go and I basically raise money and I basically pay them a monthly interest rate or whatever it is. And then I owe debt, right? I owe them, I'm a debt to them. Equity on the other side is an equity stake. So an equity stake would be more like your joint venture if you're talking about a passive or active investor or a partnership, an active partner versus a passive partner. So that's going to be the difference on the equity stake. So at the end of the day, it's really going to come down to really what your goals are and what you're trying to do. So for example, raising debt could be one where, for me, like I'll give you an example, is if I'm doing I'm doing a wholesale or off-market deals, I'm going to raise capital. So I have the funds in place to do to take down the wholesales, for example. Or if I'm doing wholesaling itself, I'm going to raise capital to do the marketing, as an example. Raising equity is going to be like, okay, I got a property here. So, hey, Danny, I know you can get a mortgage. I can't. So I got the deal here. This is what it looks like. I'll bring the deal. You can still get a mortgage. I can't, or you have access to more money. So let's work out an equity stake in this. So in that case, it'd be whatever we negotiate, whether it's a 50-50 stake or whatever that is.
And I think the reality is it's going to be different for every investor. You really have to actually check, what are your goals? What are you looking to accomplish? And based on that, what are the strategies that make the most sense? Here's what Matt McKeever talks a lot about. Most often, we like to think about how much money we want to make, and then we want to talk about the strategy. Okay, I'm going to do this, and then I'm going to just pick my backyard because it's close by, and there isn't much else to do. But here's the truth. You actually want to start with why, then come up with a SMART goal. Based on the SMART goal, you look and evaluate the different strategies that make the most sense to really accomplish that. And based on the fundamentals of different markets that you research, you then choose the market that can really foster that execution. But based on that, that's what in part will help you answer whether you should raise debt or raise equity based on your goals and circumstances. So it can't be a one-fits-all type shoe, because that's not how real estate investing works. And so that's definitely one thing. Now, let's go to some case studies, because I need y'all to see in real time what exactly Mark did to be able to raise capital. But before I do that, I actually want y'all to fill out this poll. How are you currently financing, or do you desire to finance your deals? Either through savings, through JV partnerships, you're borrowing debt, RSPs or other. Put it in the polls while Mark gets set up here, because he's going to bring up some really good case studies. It's all you, Mark.
Okay, awesome. So let me do this here. Okay, cool. So I'm bringing up a whiteboard. Hopefully you guys can see what I'm doing here. So I'm going to keep this very, very simple, because I think a lot of us, we're our own worst enemy. Okay, that's the thing. We're our own worst enemy. I think we look at money as, oh my God, that's going to be the hardest thing. The late Steph Arnoux had a really cool, he has a great book I highly recommend. It's called Money People Deal. So if someone would put that in the comments, Money People Deal by the late Stefan Arniel. Phenomenal book. So can you guys see this little triangle I'm putting here? Can you guys see that? Okay, great. So when you look at this triangle, there's 3 elements of this triangle. There's money. There's the deal. Okay, sorry. And then you got the people. Okay, so having said that, all you need to do, any of you, is just simply come up with 2 of the triangle. The third always follows suit. So let me explain this to you. If you have the money in the deal, the people are going to come. You're going to have flaunts of active partners. You see it all day long. Okay, so you see that. If I just got people and I got the deal, guess what comes? The money will simply come because it's too good of a deal. Okay, so you can see how this triangle works here. Does that make sense for you? Just give me a yes or no. So this is what I want you guys to always think about. So this is why it's so important that we want to get to the source of the deal early on, because this is where the power is. Because ultimately, again, where we're going to hit the wall is going to be on the money aspect. So this is where we have to come in. Cool? Awesome. Okay, let me clear my screen here. Okay, so let's go to the next thing here. So what does it mean by money? And we're borrowing money. There's different ways you can look at money, borrowing money. You can either look at money as unsecured or secured, okay? So the secured side is you're going to secure it to an asset, okay? So what you're going to either register on title. So for example, if someone, let's just say it's someone I really don't know and we're starting to build a relationship with, and they'll come to me and they'll say, hey, Mark, I need $100,000. So there's $100,000 they want. So what I'm going to do is I'm going to say, okay, fine. This is great. I appreciate you coming to me. I know you started investing in yourself, but I really don't know you that well. The insurance for me, I need some insurance here, because what happens if I give you $100,000 and you run? Okay, no problem, Mark. I have a house, and the house has $200,000 of equity sitting in it. So what I'm going to do is I'm actually going to lend $100,000, but I'm going to secure it to their asset, meaning that there'll be a lawyer involved. There'll be an appraisal involved. I get this all done. And what happens then is it goes on title of that property, gets registered. So in the event this person decides to sell their property without telling me, I will get my money. Okay, it's a protection thing. I can negotiate my interest rate as well. So typically you got your first position for a mortgage, which is the lowest rate at a bank anywhere, because that's first position, meaning if someone runs away from the property, they're protected, they got the asset. The second position is going to be a higher interest rate, because after the initial debt's paid off, then the second position comes. That's why on the second position, we pay a higher interest rate. The third position, so you can keep on going down the list. And as you go down from the top, you're going to be paying a higher interest rate because of the intrinsic risk. Okay. You guys follow me? So I can either put to an asset. I can put it to someone's car, for example. So if I got Ben needs 100,000. Like, no problem, Ben. Give me not that I would do to Ben, because Ben and myself have a great relationship, but just to give you an example, Ben, you have a Lambo. I'm going to secure it against a Lambo. So you don't pay me back, I get the Lambo. So you can do that on so many different things. So that is what is a secured lend. Then there's the unsecured lend. An unsecured lend is going to be your simple prom note. Okay. So a prom note is simply saying it's going to be more on a trust factor. So again, this is why it's even more important to work with someone that you know, like, and trust. Also very important. This is where the prom notes got. I mean, I lend on prom notes all the time. But again, the asset is the individual. I need to know that they're putting skin in the game in development of themselves. Okay. I'm looking for transformational relationships, not transactional. I kid you not, how many messages I get on a daily basis that say, hey, Mark, I need $50,000. It's worse than my teenage child asking me for money. And these are people I do not know. Hey, I need $50,000. Yeah, so do I. You know what I mean? So, and we're going to talk about that in a second. So a prom note is simply putting something on letter. You both agree to it. And basically on that letter, you're basically saying for the terms are on there, your interest rate and so forth, and basically instruction. So that's going to be your unsecured. So there's secured and there's unsecured. And I'm just going to do it on a very simplistic approach. Cool? Okay. Awesome. If you guys have questions, make sure you put them in the comment section. So let me give you guys a couple case studies here. So in one case, I'm going to talk about me lending money here. Okay. So I'm going to talk about me just simply doing a lend here. And I'll just show you how easy this is. How many of you on here in the comments, maybe let me know, have a line of credit? Just say yes, no, don't have one, don't believe in them, money's evil, whatever you guys have to say. So let's just say you have a line of credit. And let's just say this line of credit, I'll put it's unsecured line of credit. And the unsecured line of credit, I have 30, let's just say there's $30,000 in here, okay? So $30,000, okay? My interest rate on this, because it's going to be unsecured, okay? So let's just say I'm paying 7% interest on this. Okay. What I can do with this $30,000 is, again, I'll pick on Danny here. Danny goes, hey, Mark, I need $30,000. I need it for my down payment or I need it for my renovation costs. Okay, how long do you need it for, Danny? Because I know we're both in the same mastermind. I know, like, and trust you, and you're good for it. Okay, I need it for 6 months. No problem. Okay, so this is what we're going to do here. We're going to do a promissory note, and I'm going to lend you $30,000. So I look at my own finances. I have this sitting there, and now I can lend it to Danny. We negotiate that I'm going to lend Danny $30,000 for 6 months at 12%. Danny's getting what he wants at 12%. I'm getting what I want. And this money that's not making me any money because it's sitting there, I can make now 5% money. So Ben talks about this a lot. It's about living in the spread. That's how the banks work. That's why when the Bank of Canada says we're keeping interest rates low, and the bank says, well, we're only making this much interest rate on it, they're making money on that spread, folks. So when interest rates go so low, that's where that's happening from. Okay? I've gone as far as someone said to me, hey, Mark, I need to borrow money from you. Okay? And I've actually done this for myself. So here's an example of this. And this, some of you are going to think I'm completely out to lunch, but I did this. I have a credit card. What's that?
Give it to us.
Give it to you? Okay, sounds good. Between these Kleenexes, I tell you. Okay, so a credit card. So let's just say you have a credit card, and the credit card is 19.9%. 19%, okay? Someone says, hey, man, I need a loan. And I'm going to give you, and I said, okay, how much do you need? Well, I need 15K. Okay, I can give you the 15K. I'm tapped out. But if you really want it, it's going to be expensive. Again, it's going to be short term. I can lend this 15K out to Danny. Say, Danny, I'm going to lend this out to you by 25%. How much am I making? I'm making 5% on my money. So not only am I going to be able to pay down my credit card or pay the interest on it, which is again going to be tax deductible, depending on the accountant you speak to, but now at the end of the term, I'm going to get all this back because this is simply interest only. See how easy that is, folks? Okay, so that's one example of if you have to lend someone money. So the fact of the matter is, folks, this is important more than ever before. I'm telling you today. Cash is a liability. Cash is a liability. If you're sitting with money in a line of credit right now, it is costing you more money for it to sit there. But Mark, my credit score. Screw your credit score. If it's not doing nothing for you, put it to work. Put it to work. Even if it's just for a few months. Because, folks, cash is a liability. Debt is an asset because you can put money. How many of you guys have seen how much money is being printed, right? And if you look at inflation, if I'm sitting on that account at 7%, for example, and I'm lending it out at 12%, I'm making 5%. Well, inflation is probably going to be about 3%. So I'm eating away at that. I'm keeping above that level versus, decaying my money. So when you say cash is a liability, debt is an asset, and real estate becomes the hedge. Okay, so that's another example. Now let's look at another example. On the weekend, should not say this out loud in public, but I was at someone's house, COVID police. No, I don't got COVID. This is allergies. Someone's place. Hey, Mark, what do you do? I help people invest money in real estate. Oh yeah, I've seen this. I've seen your work. I've seen what you're doing. Tell me a little bit about it. Yeah, this is what we do. We help people invest in real estate. Okay, cool. I kid you not, folks. Because I've invested so much into myself, within 2 minutes, he says, I'm in. Okay, great. $100,000 promissory note unsecured at 12%. So the way we did it, again, it's so like everybody's probably wondering, what's the formula? It's pretty easy. He's lending us $100,000 for 12 points for 6 months. So essentially, and this is not per month, this is annualized, okay? Annualized. So let's do the math. Essentially, it works out to $1,000 a month. But how do you pay the $1,000 a month? I have $100,000 sitting there. And I've also dug the well with my other projects. So folks, this is how you scale. This is how you scale. I went from going from 4 properties and slaving away and doing it the institutional side versus the we'll call it what the way investors should do it. So I went from basically going from 4 properties in 1 year to this year 19 transactions in the first quarter. This is how it's done, but it's going to come down to your relationship with money. So folks, why did this person give me $100,000? And that's just the beginning. I think this year we've raised over $1 million. How did we do it? It's because we're investing in ourselves, folks. We're investing in education. We're investing in education. We're investing in ourselves. So ultimately, I am the asset. It wasn't like, oh, can I put it against a property? Can I do this? No, here's $100,000. Okay. So that's just one avenue you can do a lend with. There's other aspects you could do, folks. If you're in wholesaling, for example, you can say, hey, someone says to you, you know, I'm just going to pick on Tom here. Tom Falcons is here. I had a great talk with him today. Tom says, hey, Mark, I got an off-market deal here. I'm like, okay, how much do you want for it? He goes, well, my wholesale fee is $75,000. Oh, man, that's too high. Tom can come back to me and saying, hey, Mark, I'll do a deal with you. I'm not going to charge you a wholesale fee, but what I want to do is I want an equity stake in this. So when you refinance it, I want a 20% stake in this, but I don't have to do a thing. It's simply a joint venture. I have to get the mortgage. I don't have to do it. Like I have to carry the burden of this, get the active partners. All Tom is doing, he has an equity stake in it. What has Tom done? Tom has now owns real estate. Is this making sense, folks?
Come on, let us know in the comments, man. Is Mark giving you the game or is he giving you the game? Because, man, this has been like so many different scenarios, so many different cases where you can raise capital, whether it's through your line of credit, even your credit card. It could be your home equity line of credit, whatever the case may be, secured, unsecured. It could be against a property. It could be unsecured based on a relationship that you have. It doesn't matter. What really matters is, do you have the skills, the relational connection, and the ability to put yourself out there so that you can get it done? Go ahead, Mark. I see you writing some more stuff on this board.
Money is abundant. There is trillions of money sitting in RSPs in this country. Ask, so you can, if people have money there. So now there's programs where you can do, the banks won't tell you this. You go to TD, no. You have to put money in their bank account for their, and you can only choose between 5 or 6 different products for them. So what you can do is you can find self-directed RSPs. There's only a few companies that do that. One of them is Olympia Trust. So that's who I use. So when what you can do with that, or even TFSA or RESP. So if you have your children's education sitting there, what you can do is you can put them in self-directed. You're not cashing them out because people are like, oh my God, I'm going to cash them out. I'm going to pay a penalty in taxes. No, folks, what you're doing is you're just simply putting them into an RSP vehicle that's now self-directed. So hypothetically speaking, let's just say Danny Blago says, hey, Mark, I need $200,000 from you. Okay, well, I don't have the cash, but I'll tell you what, I do have RSP money. How much equity do you have in that? Well, I got $200,000. Okay, great. How long do you need it for? I need it for 7 months. Okay, what we're going to do is we're going to do a self-directed RSP where that RSP is going to be secured to Danny's property and whatever we negotiate. So if Danny says to me, hey, I want 8%, well, I can afford 8%. Okay, let's do 8%. So everything's negotiable, folks. And the nice thing is I can rinse and repeat. So instead of being in a stock market where, the stock market's been on a tear, But it's going to go like this. If you want to put some of your funds, like your retirement savings, to be a little bit more, I would say more conservative, and maybe put them on another type of asset, you can do this. You can do this with RSPs. You could do this with TFSAs. You could do this with RESPs. Furthermore, what you could do is some people will borrow to put money into their RSPs. And then from there, because they get the tax benefit, they get that check at the end of the year or whatever is at tax time. Let's just say you're borrowing, because money is so cheap right now. You borrow money from the bank at 4%, right? 4% money. You put that into an RSP. You get all this money back. Let's just say you get half of it back or whatever. You take that, you lend it to someone for 12%. You're making money on that spread, folks. Money is so cheap right now. So these are the ways we have to start thinking about that. Okay, the key thing is that these have to be registered. TFSA, RESPs, and RRSPs. How was that, folks?
Come on, man. That is amazing. I love it. Now, there's only one question left to ask, y'all. Who is taking action this week? Man, I don't know what needs to happen. You've seen several different scenarios. Don't worry about the replay, y'all. You will get this in the coming days. But here's the biggest thing. You need to start having conversations around money. And you need to position yourself as the one who is capable. And don't just pretend you are. Make sure you invest in yourself. Fix this foundation crack. Understand what's required in order to perform. And that conversation at that point, when it comes to raising money, becomes a lot easier because you have the confidence, you have the expertise, and you also have the association of being in smaller rooms because you invest in yourself and you now have the ability to take action. And so that is the biggest thing. Tanya, you are absolutely right. Mic drop. That's all you got to say after he just gave you case after case after case. You can say he throw the book at you when it comes to OPM. And so, man, that's phenomenal. I love it. I love it. And so here is the action steps I need you to take away. Number one, I need you to go on cashflowtribe.com and I need you to connect with at least 3 investors. At least 3 investors. Why? Because you need to put yourself out there. Grant Cardone always talks about obscurity is the number one reason people are not able to be successful. If people don't know you, they can't have an opportunity to invest in you. And here's the reality. I'm not simply just talking about other people who have money and all these different resources on Cashflow Tribe. But what about your family? What about your friends? What about your colleagues? Because here's the reality. If there are people in your life who are looking to make a return on their money, why can't you be that person? Why can't you be the one who is responsible and capable of executing their desires to get better returns than what they're placing them in right now? Because here's the truth. The reality is, if that is what they're looking for, they're going to place it somewhere. Why not you? And so find alignment, understand their pain points, understand their goals for their money, which is number 2. When you understand what they're looking to accomplish, you see, did you notice in all the scenarios that Mark just went over, he asked questions. You know what's interesting? What he didn't do was just say, hey, I'm looking for money. Do you have money? Hey, do you have money? Hey, do you have money? No, it's like, hey, what are you looking to do? Hey, first of all, my name is Daniel. I'm a real estate investor. I help people get returns on their money by investing in real estate. Oh, you're looking to invest in real estate? Tell me more about that. What are you looking to do? See, when you're able to have more conversations and you're personable, you now put yourself in a position where you're able to have that conversation. And then number 3, find ways to add value and make the ask. Guys, I'm telling you the reason why Mark is able to raise hundreds and hundreds and hundreds of thousands of dollars, millions of dollars, is because he has done this game over and over and over and over and over again. He has built relationships. He's built this to a point where he has a Rolodex of people he is able to raise capital. He doesn't depend on just one person or one resource. He has several resources because he has done this relationally and he's done this by getting results. And so this is exactly what everybody else needs to do in order to get results. All right, this is the action step. So let me know, type yes in the comments if you are committing to taking this done, because here's the reality. 60% of y'all said you're action takers. You're ready to do your first to fifth deal. So I want to know, are y'all really going to take action on this? Because, man, I know I didn't bring Mark on here just to talk through one ear and out the other. All right. And so let's really continue this, man. Talk about real results here for a second. We see Harvinder hoteling a property. She took one down and then put it back on the market in a very hot market, netted 163K, or maybe it's gross. Either way, that's 6 figures, which is awesome. And then we have my man at TJ Ainsborough, right? Man, a good friend of Mark and ours, right? He's been doing super well with his business partner, Alina Kustova. And they've been taking a lot of action over in 2021. You've seen some people in the chat how they've been locking up deals. I gotta shout out Adrian Montine, because he has been phenomenal. He has been one who has been going through this process, looking at all the classes. Check this out. He actually had attended the calls where how to do deals using Kijiji. Literally took action and now is working on a property out in Nova Scotia using the same tactics. That's what I call an action taker, and I'm gonna shout you out because you definitely are the epitome of what we're looking for. All right, and so here's the reality, guys. This is what Cashflow Tribe is all about. We want to give you the knowledge. We want to give you the ability to execute by having a community, having those having calculators where you can analyze and run deals. Also have trainings just like this one. If you like this training, guys, we got 4 others just like it where you're able to dive in deep, not just where you're looking at me and Mark on the screen, but on Zoom, you are as well as on screen. You're as well as communicating, building relationships, having money conversations, having tactical conversations so that you can do your first or next deal. That's the bottom line. If through Cashflow Tribe, you are not able to do your first or next deal, we're not doing our job. But I am telling you, I'm confident that you absolutely have the right expertise and the right resources, especially when you have someone like Mark Smith in your circle when you're showing up to calls just like this. All right. And so it's really for everybody. If you're just learning, grab a free membership. No pressure. Just grab a free membership. But if you are looking to take action, you're ready to make things happen, I highly, highly, highly implore you that you grab a premium membership. The reason is because the bonuses and the content that you'll be able to get access to, the ability to be a savvy investor, to be able to get that first or next deal, that really is the biggest difference between you holding yourself back or you getting to the next level. You want to invest in yourself. What did Mark say? He's not going to invest in someone who is not willing to invest in themselves. So there's only one question. What is holding you back from investing in yourself? Imagine you are only $59 away from grabbing your first property, or even $588 if you're really serious about investing throughout the rest of this year, because we have a yearly membership as well with amazing bonuses where you're able to get really in deep into smaller rooms where you'll be able to level up. So here's the deal. My camera's kind of blocking the image there. Let me swoop. There you go. The first person to grab an annual membership, we're gonna throw $250 off the price tag for you, and throw you in a mastermind ticket experience valued at $500. So you're able to get those two things together for the price of only $338 for the first person who signs up. And if you do grab an annual membership, you absolutely will get thrown in a ticket to the mastermind experience as well. But here's the deal. The mastermind experience is really where things start to level off. And I'm really going to give Mark Smith the mic back again, because only he can really tell it the way it is. Go ahead, Mark.
Yeah, thanks. Appreciate that. Yeah, no, this is, the next mastermind experience is talking about this, and we're going to be doing a deep dive on this. Folks, I can tell you, and this is I'm not going to poke at you. Actually, maybe I will poke at you. I won't mention any names. How many are guilty of that will go on the Cashflow Tribe website, or you guys will go on the Cashflow Tribe on Facebook and saying, hey, I got a deal. I'm looking for a partner. I'm looking for this. I'm looking for that. That's like basically going on Tinder essentially and saying, swipe right or swipe left, and I'm going to decide who I'm going to get married to. Folks, that is all transactional. All transactional. When I see posts like that, I remember the name and I just keep on going, because that tells me they're only thinking about the money that they can make and what's in it for them, and that's it. So you have to come at these mastermind experience events, because we do a deep dive on all of this. We do a deep dive in talking the talk, really showing how we do things, how we're able to raise money. Because I can tell you right now, if I did that, in fact, let me rephrase that. If I did that without investing in myself, how would I be seen? But now that I invest in myself, I can tell you right now, I can do that right now, and I'll have the floodgates coming up saying, hey, Mark, you're good for it. We know you. So folks, you have to invest in yourself. We spend a whole day on this. We go hard at it. If you can ask someone for $5, Why can't you ask them for 10,000? Just a couple more zeros at the end. That's what it comes down to. But before you can lend anybody, or before anybody can lend to you, because now you have to be the most amazing fiduciary of their money. And if you do not have your funds in check and you're having issues with budgeting and that kind of stuff, then you have to come to the mastermind, because we go through this. Okay. So it's, again, you screw up once. It's in this game. When it comes to this, we don't want you to, because that will be a cloud over you. So folks, come join us at the Mastermind Experience. We have some amazing speakers. We go through the strategy. We go through the tactics. We go through all of this. So it takes away the guesswork for all of you.
Absolutely. And if you have any questions, any concerns, anything of that nature, we have the lovely Sarah Fram as well. She is in the chat. She absolutely can answer questions, anything that you need, and she'll be sure to reach out to you if you need any assistance with it, 100%. And so with that said, we're going to really round out the rest of tonight with a few Q&A. All right, Mark, I'm going to throw some questions over to you, and therefore we can add some more value before we head on out of here. I'm going to start with one. Let's start with Arlie. When is the Mastermind Experience, Mark? When is the next one for raising other people's money?
So that is the last week of May. It's going to be the last weekend of May. More details will be coming. So we like to usually plan it for the last weekend of the month. And there we go. Thanks, Sarah. So May 29th.
Boom. There it is. May 29th. That is a Saturday, if I'm not mistaken. Yes, it is. Just check my calendar. So there you go. Okay. And so let's go with Stephen Farrell. He says, and I'd love for you to answer this question. He says, one mistake and you write them off. I'll give you the floor.
One mistake and I write them off. Well, it depends how. I mean, we're all human. But the fact is, if someone's coming in with a pure transactional standpoint, that's the biggest mistake right there. That's the biggest mistake right there. I kid you not. My phone is ringing off the hook with people I do not know saying, "Hey, I need $50,000," type of thing. It's unbelievable. So, but the people I get to know in the Mastermind Experience events, I mean, I can name off names here. I got to know Adrian really well. There's other people that I've got to meet. Hey, it's a different level of conversation. I mean, Dwayne Lapierre, he's right there as well. Another person that they invest in themselves. I'm willing to spend that time with them, and because we're on the same path. And I'm not trying to discriminate from people but it just makes things a lot easier with respect, because people are within that same mindset. And that's what it comes down to.
Absolutely. 100%. That's an awesome response. We do have one question here. It did come in private, so I won't say their name, but they said, so Mark, you need a promissory note for lending money with using your credit card or line of credit. Do you need to talk to your lawyer for that? And are there other documents?
Yeah. So anytime there's an exchange of money and you need a paper trail. This is a business. So you need to have a paper trail if you get audited or whatever. So I like to do that. And you know what? Yeah. I mean, our lawyer gets all the documentation. And number two is they write up all the promissory notes that we have. So we have a template. So we spent some good money on it. So I think we spent probably about $2,000 to create a promissory note. And then the next thing that we do is anytime a prom note goes out, it actually gets sent to our lawyer's office and they keep it. So it's registered with them as well. So we have to do this, as a fiduciary of other people's money. And what this does is when we tell people that we're sending it to, and they actually see it, they actually get copied on all that to our lawyers, and they see that, they can sleep a little bit easier at night knowing that too. They can sleep a lot. So that's the other investment. And some may say, oh, a lawyer's going to cost me $2,000. If you're complaining about $2,000 to get the right paperwork, it's going to be exactly the mindset. And wait till you get sued for millions of dollars. You'll be saying, hey, I wish I had that $2,000 and put that money to it. So folks, you got to invest money. You got to invest time. These are the things you have to do. I'm sorry. And if you aren't willing to, real estate investing isn't for you.
And I think that's something that needs to be said. The reality is, there has to be a level of personal development in order for you to excel in this game. And and this is why, as much as the vehicle works, it still depends on the driver's ability to drive the vehicle. That's really what it comes down to, definitely. One other question here is, as a follow-up question to this, is that where my education needs to come as far as understanding the paperwork, or do I leave that to the lawyer? And if I do, what is the education that I need to focus on as someone who raises money?
Yeah, great question. So I focus on the who. For those of you that are on here before, I sound like an owl. I say who so many times. And so the thing is, let the lawyers have the paperwork stuff. That's all figured, like it's a template. But what you need to do is, by coming to an event like this is where we're going to be going over the education standpoint. What you're doing is you're selling yourself is what you're doing. Remember, the 3 W's is, if I go to someone and I'm trying to raise money, in my mind, I'm thinking to myself, why should they care? What's in it for them? And why me? So we go through that. So you got to build your arsenal of that. So, for the person that asked that question, you have to ask yourself, hey, if you went to someone and said, hey, I need to raise money for real estate investing, would they give it to you? And if the answer is no, that's okay. That's okay, because that means that there's either a confidence issue or there's an ethical issue. And I trust you being here. It's more of a confidence issue. And confidence comes with taking action. And that's where the skill is made. So practice, practice, practice. But you have to be in the right room and knowing what that language looks like.
100%. We just got 2 more minutes before we head on out of here. And so let's see who else got some questions here. Ed says, hey, Mark, I need 50,000. I think you mentioned that random people are ringing off your phone asking for a bunch of money. So,
oh, man, I tell you some of the stuff I get. Some of the stuff I get, man, I have to change my phone number, to be honest with you. It's not that bad.
No, that's awesome. All right. So we'll definitely end it off with this question. Mark, here's the deal. I want to do my first deal. I'm working on doing some marketing, whether it's flyers or Kijiji, and I'm looking to lock up some deals, but I have no contacts. I don't know nobody. What should I do to start raising money today?
You need to get in the room. You need to get in the right room. That's what you have to do. That is the answer. You have to get in the right room, or you can get in the right room and you can compress time. So you can get in the right room, spend 6 hours in a day, get that compression of time, or you can do what you've been doing already, which is watching all Matt McKeever's videos and still not doing nothing. That's really what it comes down to. So folks, you come in that right room, your feet are going to be held to the fire.
And you know what? I actually want to jump on that real quick as we round out here. Here's the deal. And I'm thinking to myself, if I don't know nobody that has money, I don't know who to go to. I know I can get the deal. I know I'm going to work on locking up deals, because I've already learned from past weeks. I don't have to spend money to get deals. I just need to use my time and my energy, and I can deploy my tactics and get deals. So I know that's not up for discussion. So when it comes to raising money, what's the most efficient way? The reason why Mark says that the most efficient way to raise money is to get into a smaller room is because when you're not in a smaller room, you're going out and you're just hitting people. Oh, I'm going to talk to 20 people today. I'm going to talk to 30 people today. But what if those 20 to 30 people all came to the same event? It's as if you paid money for them all to come to you. And therefore, you're now taking the pick of the litter. I'm listening to conversations. I'm hearing what they're saying. I'm taking down notes. I'm connecting. I'm building relationships. And you're doing this all in one day where they all came to you. And not only that, sorry, my Google Home's going off right now. Not only that, what also was amazing about it is these are qualified people. Think about it. If you spent the money to get into the other room, so did they. And if they are willing to do that and invest in themselves, you already passed the first barrier of whether or not I should spend time talking to this person. So already you are doing 3 things in one. And so this is the reason why investing in yourself already does wonders before you even have gotten started. And so just something to consider. Mark, before I let you go in the audience, any last words today?
No, folks, you know what you guys need to know? You guys know what you need to do. You need to show up. That's it. We all have the power of choice. We have the power to choose. That's it. It's your choice. Just think of yourself giving your own child or your future child advice. What would you tell them? Would you tell them to go watch YouTube for 2 days to figure it out, save themselves whatever the discount is here? Or would you say get in the right room with Danny Blagrove, with Mark Smith, and listen to these guys, listen, be a sponge, and apply it? What would you do? And if you're not, if you tell them you tell your child or future or grandchildren to do that, but you don't do it yourself, again, that rests with you.
Bottom line, I couldn't have it any better said than the one and only 7-2 mindset investor, Mark Smith. Mark, I appreciate you battling allergies and battling the limiting mindsets of everybody everywhere, helping one person at a time to get things done. So with that said, for myself, Daniel Blagrove, Mark Smith, the mindset investor, along with Vinny and Sarah, we thank you so much. I hope you enjoy the rest of your night. Take care, and we'll talk soon.
Take care all.